Um,
Yeah.
anyway, so let me ask you guys, what's everybody's thoughts on the interest rates? So this does have something to do with raising capital, but obviously interest rates are coming down. I'm hearing that they're going to continue to trend down. And I'm hearing all this stuff of like they're going to get into the fives, which they're actually not too far from. I don't know. I've been around a little while now, but it seems like every election year, something just miraculous things kind of happen. I don't know. This may be just me, but like gas prices kind of come down. It's like they're getting kind of like voter confidence up. I don't know. Maybe that's not it. I don't want to get political, but I'm just saying like that stuff seems to kind of happen.
The magic eraser comes out to make you forget about the last
Yeah.
couple of
Yeah.
years and just
Yeah.
think about today. Yeah, for sure.
Yes. Everything's great. Everything's great. But anyway, what do you guys think on that? Like, where are we at with like interest rates? Does anybody think they're going to go back up? I mean, obviously at some point they will, but this year, what are you guys thinking?
I do not see them going up. I see them staying stagnant or trickling down very slowly. But I would not wait for interest rates to go down necessarily.
No, I agree with you, Craig. Don't wait for it. Just buy now and underwrite it so it works with today's rates. Like,
And if they go
Yeah.
down, it's a bonus later on if
yeah,
you can refinance.
yeah. You don't want one thing that we learned really early on from watching other people. We never had this issue ourselves, or at least not yet. Is we'll never underwrite a deal or look at a deal that only works if you refinance down the road. And
Right.
I see that quite a bit. There's another group within my industry that is pitching deals and they're out there publicly. They're doing 506Cs. So they're, advertising everywhere on social media and, 25% IRR and this and that. And we'll have a full return of capital in 3 years. And it's all based around a refinance, which, you can do. There's a way that you can build up equity and you can cash out and refi back. But I would not count on making the numbers work only if you think you can get into a better rate in a couple of years, or you'll just end up in too much trouble. So what I can say for the deal that we're going to close next month, we haven't locked in our rate yet. We're actually doing a 3-year fixed. We had an option for a 5-year, but because we think that rates will most likely be the same or better in a couple of years, we're going to do a 3-year instead of 5 to save some prepayment. We're going to fix it with a swap. And when we started underwriting the deal back in May or June, we were looking at like 7.8, 7.9%. We underwrote the deal, and our offering memorandum that went out to our investors was at 7.5. And as of last week, in anticipation of the September rate cuts, the pricing's come down. We're at like 6.3 right now, and potentially could come down more before we close the loan and lock the rate in like 2 to 3 weeks. So, it seems as if lenders are anticipating that, and depending on what type of loan you're able to get, they're already kind of pre-pricing that into rates. So we've seen them come down over 1.5 in the last couple months.
Okay. That's kind of where I'm at too on that. Antoinette, you got your hand up. You don't, you're so polite. If you want to do that, you can, but you could just blurt it out too. No one cares. We just step on each other here. But go for it. What do you got?
Yeah, no, I have a question about what do you guys think about refinancing? So I got my BRRRR last year, January, and then there was a hard money lender, and then I refinanced in the end of September. So it'll be a year soon, and the rates are dropping. Like, what do people think about when to refinance? I mean, I'm fine now, but it would be great to even pocket more money. I just don't know when the right time is. Should I wait till they get close to the fives or now?
For me, I don't know. I maybe wait a little bit because like Kevin was saying too, and it does seem like they are trending down more. Um, I don't know. Maybe like
I would at least wait to see what happens in the September
Yeah.
Fed meeting. definitely
Mm.
don't do anything before that. And depending what happens, there's no guarantees, but I would be absolutely shocked if things went up. There's no indication that's going to happen. So it's not like you would be missing out on a better rate now
Mhm.
than in October because something goes the wrong way. So I think at least wait, see what happens with that and how that then trickles down into the rate that you're able to get. Because once that, if they do that, what is it? Whatever they're anticipating they're going to bring it down, it's not necessarily going to instantly make the rate that you can refi into available. It might take a little while, but it should
Right.
kind of balance out for at least a period of time. So you'll have some time to figure out what you're going to do.
So I'm looking at this
Right,
some website right now, and it says that the rates right now are 5.91 on a 30-year fixed for a conventional.
wow.
Jiminy Christmas.
I'm in the sevens.
Antoinette, are you looking at a DSCR refinance?
I think so. That would be my route. And I hear that the Better Life Tribes, I forget what it's
Yeah,
called,
Better
real
Life
estate.
Ref.
Yeah, is 6.8. So yeah.
And that's I was gonna say that too, because DSCR refi is gonna be more than the typical refi. We've done a couple and they're always more, like at least percent or more higher than what you see. So if you're seeing a 5.9, you're probably looking at like a 6.9 or yeah. I don't know. That's what we've
Actually,
been.
I'm sorry. It's 6.25. 6.25.
Oh, okay.
So it's not that bad, because the conversation was that the DSCR loan rate is kind of better than some of the market rates out there. So yeah, sorry,
Mhm.
I said that
No,
wrong.
yeah. But that's a good question. And I don't know. I feel like, again, like the rates are coming down. So as far as like refis or even financing, I mean, the more houses are starting to hit the market. In Florida, it's still crazy. I don't know where a lot of you guys are at, but it's still crazy here. Like uh, rates coming down, all that stuff, but it's still it's a buyer's market, but it's so competitive. Like it's super competitive out here. And we've put in offers on multiple houses in the last like 2 months, a bunch. And I mean, a lot over ask, 30,000 over ask, and we've lost out on them. So it's just it's still unique down here, but I think a lot of other areas. I was talking to a friend out in California and he said, no, it's becoming more of a buyer's market. People are getting in, negotiating the price down and stuff like that. So I guess it depends on where you're at. But my thought is like, okay, so as far as raising capital, if you're going to do a deal like Kevin, the one you're working on, like, are you, when you're talking to your lenders, people that you're working with, your investors, are you going to hit them? Are you bringing your rates down, right? Or your requested rates, or how do they come to you with the rates?
What do you mean by that, Jeff?
Like for like when you're doing, so when you're borrowing money from them or you're trying to propose a deal, and you're
From
like, hey,
investors?
yeah, for investors.
No, our fee structure and the what we're offering, I mean, it will improve if we can get better rates, but we don't adjust it based off of what the rates are. So we'll underwrite the deal and we say we've got to buy it for, $5 million. We're going to need to raise 2.5 million to do it. That's going to be down payment, deal costs, acquisition fee, working capital reserves, CapEx for improvements. And then we run out a 10-year pro forma and say, with these assumptions, using this interest rate and debt service projection, this is what we think our returns are going to be. Now we do that early on. So for the deal that we close next month, we did that back in May and early June. And so what we put out to our investors was based off of a higher interest rate than what we're currently think we're going to get. So that means that we should be able to provide a better than anticipated return because we'll save, it's like a $2,500 a month difference in debt service just by the rate decreasing. So that if all else stays the same, that should go straight to the bottom line and back into our investors' pockets. But we wouldn't
Gotcha.
change our like fees or deal structure based off of that.
Gotcha. Christian had a question. I just was reading it here, but he said, do you think the rate cut, with the rate cut, it's prolonging a correction? Yeah, you're talking about like, yeah, I don't know.
Very
my
possible.
opinion on that is, I mean, I don't know where we're at. Yeah, I mean, obviously it's possible, but I mean, like we're prolonging a lot of things right now. I feel like, you know, we're bleeding out pretty bad, and they just kind of keep plugging holes, you know, and just kind of doing what they can, manipulating things to keep things going. But I mean, I don't know, you know, but like, again, like we were just talking about earlier, like if rates are rates, just go do your thing. You know what I mean? Like we still got to work the numbers. And we've been doing deals this year, and it's not like the rates were high or higher at the beginning of the year. Now they're lower. It's like still do it. It's like if the rates are down, the market's up, or the market's down, the rates are up. Seems like it's one or the other. So we just keep working the deal. But, and then would Jeremiah say, would you be willing to share your last pro forma that you got an accepted offer on? I think that's to you, Kevin. Is that right? Yeah, maybe.
Yeah, I'll go through that all in detail.
Yeah,
on the call in a couple weeks.
Yeah, as I was gonna say again, guys.
I
Kevin,
can't give that away, then I'll have nothing to talk about.
Yes, we're gonna tease it. We're gonna tease it big time. For a month, you guys are gonna have to wait for this information. And you better lock that deal up, Kevin. Otherwise, this whole thing's gonna flop. It won't be any good at all. So pressure's on.
Well, I got a backup. I can talk about the deal we just closed.
Okay, fine. All right, good enough.
Unless that falls apart too in the last minute.
Megan, did you have something you wanted to? I thought you posted something about you had a story or a success story or something. You want to talk about that? Cool.
Yeah, sure. I can talk about that. Intro for you guys. Hi, I'm Megan. I'm from Canada. I have two different businesses. My husband and I are growing our portfolio on the side, and I also have another business that has 9 shareholders within that company. Most of the individuals are in their early 20s, and the whole goal of building that corporation was that we were building it with the purpose of mentorship, mentoring these 20-year-olds how to grow a sustainable business, how to invest in real estate, how to do multifamily, etc. And so our biggest barrier to entry has been the ability to raise capital. I mean, when you're in your 40s and 50s, you have friends that have money and money to invest, but when you're in your 20s, you don't really have any of that. So it's been hard for them to learn how to raise capital. A couple of us attended a Canadian multifamily conference back in May. One of the girls had built a relationship with someone that they met there. And we started talking. We have a development project coming up in Edmonton, Alberta. And so this individual said, I'd be willing to test the waters with an investment of $50,000. And we went back and forth. He had tons of questions that he wanted answered. And I do think that you guys can maybe comment on this. I do think that investors don't do enough due diligence in the investor that they are investing with. And I think, especially in Canada, we have seen a lot of debauchery in the last couple of years. Millions and millions of dollars have gone missing. So the industry has really been hit hard. And I don't feel that investors do enough due diligence. And I don't feel that the investor does enough due diligence too, to make sure that this is the person that they actually really want to work with. And so kind of from both sides. So anyway, he ended up in a written message saying, I'm not comfortable with your corporate policy of transferring funds to your corporate account. I would rather do it through a lawyer and have the funds deposited there. And that for me was a red flag, because in Canada, the Securities Commission gets all over that. If you can't qualify that they know you as a friend, a family, or a business associate, you can't do business with them because we're a private company. And so I was like, sorry, I don't think you can invest yet. I think you need to wait until you know us better, until you're more comfortable in our processes, and this is how we operate. So please watch the development project happen. But if you want to, I'll jump on a quick call with you. So we got on a call, and he said, I've been to your FAQ section on your website. I've done my due diligence and researched you guys more. And thank you for the time today to have this call. So by the end of the call, he was so much more confident in our practices and protocols that he actually wrote back and took 50% of the project. So he 6x'd his initial investment.
Dang. Ooh.
And it was a huge win for these 20-year-olds. Huge. Because this is the first multiple 6-figure investment that they have. And it was a really a learning experience because for them, like they were desperate to get this $50,000 investor. But as the president of this company, I was not comfortable with it. I was like, you guys, this is not going to pass our securities commission. So we have to say no right now. And so we stepped back, and then he stepped forward and said, yeah, actually. So he brought his investment up to 330K. And he's now 50% partner of our equity positions on this deal.
Unreal. That's legit.
Yeah.
That's
Yeah.
story.
Awesome. Congrats.
Thank you.
Yeah,
So it was a really big win. It was super exciting. And I don't know where everyone is here, if they're raising multiple millions or if they're trying to crack their first six figure. But I just I share the story because I think when you do an ethical and smart job of both vetting the investor and the investors, then everyone ends up winning.
Yeah. And I think you had that question last call. Didn't you ask that to Travis?
Yeah,
Travis,
like what was the
how do
due
you-
diligence that you put people through? Exactly.
Yeah, that's legit. How now I have a question for you. Like, how does that in Canada, like, because you were saying that there's millions that have been just kind of taken or whatever. How what's going on up there? Or what is can Canada do anything about that? Like how does that work up there?
So I actually work as a business consultant for real estate investors. So investors come to me when they are overwhelmed with running the back end of their business, and they need some help to sustainably grow and scale, which in real estate businesses grow really fast, which is very unique to any other industry. And so I've had multiple clients go under because they come to me too late in the game and they don't recognize the debt versus equity position they have. They don't understand their net worth. And so what has happened is that people have just been over leveraged time and time again. And so we've had huge agencies go down in the last 12 months, like to the tune of $144 million is the most recent one. And so all of the private investors have lost their funds, and multiple businesses have gone bankrupt as a result of it. So it's like really front of mind for me as I move ahead with this corporation.
Yeah. Yeah, that's insane.
Mhm.
So okay,
Hey,
so
Megan.
oh good.
Congratulations. Just quick question. Did you have a a control stop, a barrier for how much you want to put out for investment and control of your asset? And
On this
did you
particular
predetermine that?
project, on this particular project, we actually were only anticipating of giving it 48%, but we did actually end up giving it 52% due to a couple different things. But our legal underwriting still keeps us in control. So I think all of it just goes back to how you write your contracts to make sure that you still ultimately have the final decision.
Okay, yeah. I'm glad you brought that up because that was one of
Yeah.
the things that was asked of me not too long ago in terms of what are you giving up? What does that look like? Both from a legal structure perspective, but just and those that are involved. So thanks for clarifying.
Yeah, you bet. I mean, in this situation, I think you guys might realize this too, is that a lot of times when you have investors come on board, they actually want to start learning about the industry. So they want to start learning from you as well. And so, yeah, I find that there's like a very clear line that yes, you can come along for the journey and you can learn with us as well. But at the end of the day, we are the ones who've been doing hours and decades of research so that we're going to make the final decision.
Gotcha. So when so you're saying most of this fraudulent stuff or whatever that's going on is just from basically not vetting, right? And that you said it's on both sides.
I think it's a combination, to be honest, of investors too easily investors too easily giving up their funds, without a doubt, and not doing enough due diligence on the track record of the real estate investor, without a doubt. And it's a fault of the real estate investor not doing enough due diligence to protect another person's funds. And so they're borrowing funds, they're getting in too deep, they're not recognizing what their actual net worth is and the fact that they're over leveraged. And so I think there's a really fine balance of making sure that your portfolio is stable despite any market fluctuations that happen. Obviously, we've seen crazy appreciation and then flatness in the market, especially here in Canada. The last couple of years, like some of our larger markets like Vancouver and Ontario. So yeah, people are getting caught where they're over leveraged and now their portfolio is not worth as much as it was when they bought it.
So are you investing mostly up there in Canada, or do you invest in the US or other countries, or? for you
I'll be
personally?
investing into the US very soon. We are actually packing our household up right now. You can see chaos mess behind me. We're driving out to Cincinnati next, like we're starting in the middle of September. We're driving to Cincinnati to check out the market there.
No way. So are you
Yeah.
selling, or you're just packing?
No, I usually run this property that we live in as an Airbnb, but we're taking a long-term tenant this year for 10 months just because of the decrease in the economic outlook right now. We had terrible nightly rates last year versus the previous year. So we just thought we'll take a long-term tenant and not have to worry about it. So we're hitting the road for 10 months and going to check out the US.
Very cool. Right
Yeah.
on. Well, I guess I'm pretty far from you still, Cincinnati to Florida, but yeah, that's awesome. You're gonna
Well,
love
we've got a
it.
trailer, we will travel. So
Yeah. Well, you're totally well. Yeah. And Kevin's
That's what
I'm
I
gonna
like
come
to
stay
hear.
at your park, Kevin.
Yeah, we don't have anything in Cincinnati, but shoot, let me know where you want to go.
What's
I
your
will.
closest to Cincinnati?
We're in Wisconsin, Tennessee, and Pennsylvania, so kind of around there.
Oh,
Probably
sure
none of
somebody in
those
the
very
tribe.
close.
yeah. And where's the one you're gonna secure here pretty soon?
Arkansas.
Arkansas. Yeah. Yeah, we talked about that. Very cool. Well, that's awesome, Megan. That's like
Yeah.
super cool. I love those stories. Thank you for
Thank
sharing
you.
that. Yeah, very,
Yeah,
very
you bet.
yeah, totally. Anybody else got any good vibe, good stories? Anything you want to discuss? Come on now, people. You're on here. You got to ask questions. Don't be shy. Throw us any.
I
What's up,
guess I
David?
have some news. Last Friday I closed on my first co-living house, so that's
Right on.
exciting. I'm starting the rehab process now and trying to build my network a lot. That's why I'm here at the Raising Private Capital is I see that strategy taking off and just trying to learn, how to handle getting with investors and raising the capital to kind of work towards a done for you product is an idea of mine, and then also build out a property management business once I've created the problem of having too many of these things where we're going to need to find that person. I'll be like, hey, I know how to run this thing. I'll just make a company for it. So that's where I see myself going. So this is my first one. I'm converting the garage from a 2-car garage to 2 bedrooms and a bathroom. So it'll be a 6-3 when I'm done with it. And yeah, I'm really excited. It's going to cash flow like mad. And it's a strategy I really believe in with the affordable housing crisis we have in this country. It's a great way to make cash flow in this crazy economy. And it's not terribly difficult once you systematize it. I'm in a class that's specific about that. So yeah, it was a win. I'm getting started. I'm kind of just moving fast, breaking stuff, and then I'm going to learn and systematize. And hopefully I'm in Orlando, so I'm not far from you, Jeff, that I can make a name for myself in the space down here. And the PM company will take off as I keep growing.
Yeah, man, that's super cool. That's like, dude, that's awesome. And the co-living, so you, Craig, you were just on a call today, right? With the co-living at like 11 or something.
Yeah.
Okay,
Nice.
you should jump on, David. That sounds like a good,
Yeah,
good call.
I'm in that group. I was working at the time, but I missed that one. But yeah, they've got it like in the middle of the day. But yeah, I'm jumped into that, and even Amber, I think she's a part of that, is in the training that we're in. Just absorbing as much as I can about that. So hopefully, this guy who's like the mentor has been doing it for 11 years. So his modules, he's learned a lot of the mistakes over the years and really coaches you on how to set it up. So trying to move fast, bought that information from him. I'm sort of just absorbing it and going through the process before I'm comfortable really working out with other people. But my buddy's in Dallas, which is a great market for it as well. And so he's got the same vision, same dream. We're kind of training together and both have the plan of the property management company, so we can kind of help each other grow, sort of thing, in 2 pretty hot markets for the strategy. So I'm very excited. I can't wait to get out of the W2 and really jump into it.
That's so cool, man. I love it. That is like awesome. So this property you got, it's in Orlando?
Castleberry specifically, yeah. You got to look for no HOAs, which can be kind of tricky. When Orlando, apparently they do have quite a few HOAs. You want to look for working professionals, so you want to be in an area where there's a lot of jobs and for stable tenants. And let's see, lots of parking, and you're gonna need 2 fridges. Try to find a house that has a lot of square footage. You can make some walls and add a bathroom. You want no more than 3 people to 1 bathroom is kind of a good rule. And so that's why you might have to get good at adding those. So you kind of find your buy box a little bit, and then the cash flow is crazy. These two that I'm adding is going to be straight cash flow basically. This one single family home will be making about 1850 to 2100 a month once I'm done with it, before a management fee or capex is accounted for, but still off of turning a 4.2 into a 6.3 and getting that kind of return in this economy off the MLS is just wild. That's a 5% down conventional loan to get me started, but I'd like to get into hard money or private money into a DSCR strategy going forward.
Yeah, dude, you're right, man. That's crazy good cash flow. And
I know.
did you pick up on the call? What was it, like a month ago or so, when we had the virtual summit? And I
Yeah.
can't remember the guy that was on. Okay.
Yeah, so I was Sam Wiegert. He's the mentor of his class that I actually ended up joining. Yeah. As also Travis, who you had on last week. He's actually in my pod here at Better Life. Me and Travis are great buds. So those two guys really expanded my mind. And when I heard that webinar was like the catalyst, man, I heard about those three strategies. Interested, the simplest for me. I was used to doing house hacking in my other house, renting by the room. Basically, it was a single family. We lived in the master, rented out the other ones. I was getting paid to live there. We split, we got divorced. So I'm in a rental. Once again, I'm house hacking. I have the master, I have the garage to myself, my own living room, and I'm paying the least amount, just the way it worked out. And then now this house, it's like, all right, I have some track record of doing this and making sure everybody gets along. I've had to have tough conversations of, hey, you need to be more considerate, and can you do your dishes, stuff like that, which is kind of part of this rent by the room, living with strangers deal. So it's an easy slate for me to jump into the next step of me not living in it, but running it as a business and everything being labeled, so everyone knows where the stuff is at, and avoiding drama from the start. And there's a lot of vetting that goes into it that I have a little bit of experience with as well. So it just seems like it's like meant for my purpose, which I've been kind of really searching for since the divorce, of like, why am I here? Like, where's my strengths, and how can I use it to make a difference in the world instead of just being a consumer my whole life? So I feel like really led to go this path.
That's rad, dude. That is so good. I love that. Like, these are good stories. Megan's story, yours, like, that's awesome. It's exciting to hear this stuff, and excited to support you along the way, man. Like, obviously, like, we can get on the show as much as you can. We have some pretty good guests coming on. They'll be talking a lot about that, like different ways to raise capital and stuff, and help you along the way with that. But that co-living thing, and are you using Padsplit, by the way, or are you doing it totally solo, separate from them?
Yeah, everyone. I was at a meetup last night. Everybody, I started bringing up co-living. They're like, "Oh, you mean Padsplit?" And I was like, "No, it's not quite Padsplit. It's a little different." But no, I plan on doing property management myself, and keeping that kind of in house. Sam's teachings is a little different than Padsplit. But it gets, people can associate rent by the room and Padsplit. They get what my strategy is that way. So I take it as it is. But this strategy is going to blow up. I mean, Sam's makes a good point that around the globe, basically, it's very common. It's just not really in America. Everyone wants their own place, the American dream. We need a house and stuff. And so as people can't afford it, the rich get richer, the poor get poorer. There's just been more and more of a need for this, that like it'll become a lot more accepted. Your biggest thing you're up against government wise is how many unrelated people can live in the same house. There's some restrictions for that. So as it becomes more, I think, popular, they may lift some of those, because we are solving the problem that we're having. There with not enough homes in the nation. So I think that they may be more on the investor side as time comes. That's kind of a gamble, but like, why wouldn't they, if you're doing it, as long as you're running it right and there aren't horror stories?
That's right. Yeah. Yeah. I was talking to, oh gosh, dang it. The Rocket Man, what's his name? That's on,
Not Rocket, Miller McSwain.
Miller McSwain. Yeah. Dude,
Yeah.
I was talking to him a couple days ago. He's going to be on this call too. And
Oh, nice.
a couple weeks, but, yeah, he was talking about that. He was saying like the pad split stuff, like they're really pushing more, just like cramming people in there and not really giving like this idea of like making it like a community space,
Right.
like there's actually like a game room where there's fun things to do. It's almost like getting to the point, and there's a lot of people in Tampa. I was talking to a guy, who's one of my inspectors out here. He said he's been doing a bunch of inspections on pad splits, or whatever you want to say, co-living out there in Tampa, and he said there's a ton of these guys just cramming them in there, and they're taking advantage. He's like, dude, like there's no living space at all. It's literally room, like it's a prison cell, and I feel like that. I feel like talking to Miller, I was like that, because I want to get into it too. And one of my concerns is like anything, there's a trending thing going on, right? Like it's like Airbnb or all this other stuff where it kind of trends for a while, and it's everybody gets in it. Like, what was it, 3 years ago, mobile?
Oh no, did I lose you?
We lost him.
His house.
Yeah, is it me or him?
No,
I
it's
think it's
him.
him.
Okay.
So, but to his point, I worry about that too. Everything gets so faddish, and how do you have to just
Yeah.
beat the fad? Is that all there is to it, or is there serious like down the road ramifications like Maui shutting down Airbnbs altogether? You know what I mean? I mean these things are a great way to make a lot of money, and you just do it while you can and then get out if you have to, or what? That's just something I always wonder about.
Yeah, yeah, it's a definitely a concern. I see it as a real stable option. Obviously, more than Airbnb is already inherently volatile, and then given if we have a recession or something, people are going to stop going on vacation, I think, as much, and they're going to want to keep their home. So I see it as it's more affordable. People should be able to keep their jobs or afford the bill versus being in a 1-1. But as far as regulation goes, as long as you run it right. I think if this becomes like a party house thing where there's a whole bunch of cars out front and it's loud and the neighbors are complaining or code enforcement's getting bothered with it all the time, like then yeah, then the government has a reason to be against you. But otherwise, you're just helping solve their problem as long as you have them run correctly. Like I don't know, maybe I'm just short-minded or not thinking the bigger picture, but I'm really thinking it's not going to be too bad, and it's not going to be every house. You know, there's only so many percentage of the houses that are going to be able to fit the. If there's an HOA, I'm not going in that neighborhood right off the bat. So like that'll cut it out and solve a lot of headaches down the road because they could change their regulations and kick you out if you had to. But if you skirt that and you find a city that is some are more friendly to it than others, that's why I'm saying that occupancy limit. Like Charlotte's a great market for it. Dallas is a great market, but there's other ones where they're a lot more. Yeah, he lost the internet. He says he'll be back, I'm sure. They're a lot more stringent on that, and so you may want to avoid those for longer or not go in at all. But yeah, I mean, inherently there's some risk. The good kind of upside is if you're gonna take let's say a 4-2 and make it a 6-3, or some other house, like you're kind of building equity as long as you don't lose your ass on the rehab and that upgrade money that you're putting into it. You made the house more usable as long as your layout makes sense and you're not making a prison like you're saying, then like you're hopefully going to make it back after a couple of years of making some great cash flow if things turn for the worst and you had to get rid of it. So I think there's some comfort there. I'm definitely a more conservative kind of investor. I've never felt comfortable with Airbnb or midterm rentals, but this thing just seems like so stable and conservative and just cash flows like crazy, even though it's one of those that it's like, all right, I'll just take the plunge. Like, let's see what happens. I have to make a jump on something.
Yeah, dude, and that's sorry, I lost you guys there for a little bit, and I think I had a lightning strike and my internet went out.
Oh yeah, it's Florida
yeah.
for you.
Yeah, right. And everything was good for a second there. So that, and I'm not saying like co-living is going to go away. I don't think it's going to go away at all. What I was worried about and what I was getting to there was these people that are literally building like just jamming people in a room and they're not creating kind of a good atmosphere. That's going to make a bad thing against people that are doing it the right way, like yourself. And I feel like when that kind of stuff happens, it's like Airbnb and stuff too. People are like renting out their garages. They didn't even care, especially in COVID, people will stay wherever. And it put like a frowny face, I guess you'd say, on some of the people that were doing the right thing. And I was talking to Miller about that too. He's like, yeah, that's a concern, but like you're saying too, I don't feel that it's gonna end co-living, but it's like anything, like all the big cities and stuff start shutting down all the Airbnbs. I mean, Airbnbs from San Francisco, and they are not allowed to have Airbnbs in San Francisco. That's where Airbnb is from. I'm like, so that's not good.
Oh, wow.
Right? So what they're doing is they're creating, and I get like why they're doing it. Like in Manhattan, a lot of these big cities, they don't want everything in there being Airbnbs. They're trying to like regulate that a little bit. So I can kind of see that in some ways with co-living, like maybe the cities are gonna be like, okay, we got too many cars in the neighborhood. For instance, I was a cop years ago when I lived in California, and I worked down in the Bay Area, and this place where I lived at, we didn't grow up there, but our friends lived there forever. And when we were little, we lived in the mountains, we'd come down there to visit, and they lived in a little cul-de-sac area, and there's all these nice houses in there. And then 30 years later, whatever, I'm down there working, and I was staying with these people while I worked there, and there was never cars on the street. Now there's cars everywhere because almost every one of those houses is catering to UC Santa Cruz, which is the college that was down there, and they've literally created co-living, in all these houses. So they're like huge 3, 4, 5 bedroom houses, and they're all college kids in there, and they got their cars or they got all their stuff, and there's no room for people to park. So now I'm there as a cop, I'm writing people parking tickets and towing cars, and so that's my only issue I feel like with co-living that could become, I guess, a problem is.
There he goes again.
Yeah,
The
I
thing-
guess I don't know. This is time. I guess my take on it was more of you're running a business having short-term rentals myself in a vacation location. The idea of a short-term rental is that there is an option, right? And so the option is to go to a hotel or go somewhere else. And with the co-living space, I see it as this is where people are actually living. So that's a little bit different than an option to go
It's a
somewhere
solution.
else.
Yeah,
It's
I
this,
like
it's
the
more
thought.
of a solution as opposed
Mhm.
to
Yeah.
not. I think there also is a difference, those that are actually making the mark in the co-living space to be able to very much differentiate yourself between what those that are in policy consider to be a boarding house. And we have to make a very big distinction between what is a boarding house and what is a co-living space. And so beds, heads, how many people you can fit in is more in the model of a boarding house. And now, and that's a lot different. So I think as I don't know, as the asset grows and you have more people understanding it's a business that is providing affordable housing in that way. And as you mentioned, community, other things, I think you have to be able to differentiate between yourself, just like those folks that are continuing to do short-term rental and being quite lucrative in it. They've also established a full business and are using that in their business model, and not get in areas, as you mentioned, that have a number of restrictions or there's talk of restrictions. I think would be the way to distinguish yourself in the future. That's just a thought.
Yeah. Yeah, it does come down to how you run it for sure. And that's where I don't see a lot of property managers are going to want to pivot to the headache that is managing it, because it's a totally different animal from a long-term rental. And the short-term rental is a lot more than long-term rental as well, but it's different. Everything needs to be labeled, everything's structured. There's a cleaning list that everyone has to be okay with taking their turn once a week, that they clean the kitchen and the bathrooms and things. You also have cleaners come in generally weekly or bi-weekly, but during that other time, it's someone's responsibility, and they all need to be told that as you're vetting those people, like, this is a community, you're going to be a part of that. But even playing more to the community space, something Sam's kind of out of the box thinking with that is, instead of having everyone on leases, is you make a membership agreement. So you're a member of, this I guess group you call it, of people that live in this house. And so it's a little different structure that way, and gives you a little more flexibility. I think you're on more of a 2 strikes you're out system, because you're not following the membership rules sort of deal, which is pretty clever, and I'm honestly still learning about, so I don't have a deep knowledge on that part of it yet. But in that way, you can also kind of skirt some regulation and red tape a little bit by saying, hey, these aren't tenants, this isn't a lease, these are members, they're part of a group, they're part of an organization. So that's something clever kind of that he's found that at least seems to be holding up in certain areas, at least for the time being. But yeah, it's not a luxury, it's not a I forget how you put it, but it is where they're living. It's solving a genuine housing problem, I think,
Yeah.
that is probably going to make it more liked by government than anything else. And as an investor, it's crazy opportunity. I think you can grow and scale pretty quickly as long as you're running it correctly.
Yeah, dude. And
So that's why
okay.
yeah, real quick, Miller's writing a book. I think he's thinking even bigger pockets is going to help pick it up. So that's going to make it blow up if that gets picked up by bigger pockets. And there are other people, like Sam's already got his masterclass and his podcast and things about that. So it's going to become more popular. Then there's going to be more competition. I'm trying to get in on the ground floor early and get myself going. But yeah, I'm very excited for his book and learning more about the strategy basically. And it's a win-win-win at the end of the day. Competition's a good thing. So let's just, as long as we're running it right, let's just go.
Yeah.
Another opportunity, just because I'm in government, is to be able to create the model and then be able to perfect the model to a certain degree, have a sample size, and then that's what you actually show the government. And so this becomes another way for you, again, for business owners to be affecting change on another level that expands what it is that you think you can do. So just another way of looking at it. This is what we have. This is a model that we've used. And then, hey, county, city, whomever, you could probably use some help in this category, because we're solving this problem for you. And so it's just another way of looking at it.
Yeah, having a good pitch deck for it and saying this is the best use case for the square footage is the great kind of way of marketing it. You know, it's once ran professionally and you can show use cases of how scenarios where it is ran effectively, that yeah, it's solving your affordable housing crisis problem. Do you want homeless people, or do you want these people to get a great deal, living in a nice home, getting along with other people?
Yeah, dude.
Yeah, and they own. I think we forget about the fact that counties and cities throughout and municipalities own real estate. And so it's a way to be able to say, if I'm not going to actually go to own it, then I can actually, my company can operate it for you. And so just another way of looking at it.
100%. Yeah, no, I think David, you're definitely onto something, and it's taken off, and I feel like I've known about it for a little while now, and I can definitely see it getting more and more popular, and I think it's a great fit for what we have going on right now in our country and other countries as well. So that opportunity is huge, and that brings the other question is like raising capital for that kind of venture, right? It's a new venture. It's not something that's been around that long. So there's going to be a lot of people that say, oh, like, has it been tested? You know, like whatever. Obviously it has, and it's legitimate. But as time goes on and it builds and more people are doing it, and especially when you show your investors the cash flow that you're getting and all that stuff, and the areas that they're buying in, because most of them are in metropolitan, nicer areas, right? And usually decent homes. That's a win, dude. I think you have a way good shot at raising a lot of capital to get people on board on this. I mean, why wouldn't you? The returns should be phenomenal. You know what I mean?
The only
Yeah, I
thing
think the same thing.
just from a legal perspective, like I do co-living right now in my house, like people transitioning from homelessness to housing. The problem is that many of the towns and cities, like Ty was alluding to, they have these on the books, I forgot what they call them, but basically it says you can't have more than 4 unrelated people living in a household together, or 3. So like when you talk about funding later on or getting like raising capital, like we also need to be lobbying in order to change these things so people will feel comfortable putting their money into something like this. Because at the end of the day, you can run it really well and really quietly, but there is that potential of the city or the town coming in if that one neighbor gets upset with you and has an issue. So people who are putting their money into this will want to feel a bit more comfortable that there isn't that kind of possibility that later on their fund, that what they put in could be in jeopardy. But I love it. I love what's happening, but we also have to think about like, how do we get in front of it and kind of get the towns and the cities to change these laws on the books so that we can do it more openly, I guess.
Yeah, that's
Right.
I forgot that I'm sorry, I completely forgot that you did that. And that's a great point. And you know that, and you're right, like the lobbying or getting behind it early, so we're not dealing with this problem later down the road where we're trying to fight the system rather than teaching the system now, like, hey, here's what we're doing, here's how this works, you know, and like working it out. But yeah, that could be an issue later on down the road. But as far as an investor, like if someone was going to approach me with David's deal and say, this is the returns, this is what we're getting in today's market, yeah, that's hard to beat that stuff, right? And it's good.
I think it's actually a case for private money where you don't have, like, if you do a house and you take a 3,000 square foot 4-bedroom house, you make it a 6-bedroom house, the bank's not going to give you credit for a 6-bedroom house. You know what I mean? They're not going to be happy. But a private lender, if you can explain the system and show them the money, it's a better money source is private lending than a bank if you can figure out how to make a deal work for everybody.
Mm-hmm. That's a very good point. Yep. Yeah, because I mean, even then, like, yeah, the banks, I don't know, lending, because David, you got lending, you said through a bank, right? Just straight up.
Yeah, it's conventional, just typical appraisal, 5% down.
But they're not.
There's comps
not
though.
lending you based on the 7 rooms. They're lending you on a basic house without being made into a co-living space.
In this case, yeah, I plan on after 2 years, I can get the PMI off and do an appraisal. Then it's based off of that. And then because I am pulling permits and stuff, it will be shown as a 6.3 with extra square footage because I'm converting the garage. And then there are comps that are already in that neighborhood to use when I go to sell. So it's not the only 6.3 that's in that area. Other people have kind of done the same thing. They're just not using it for co-living. So yeah, to initially get in the deal, no, it's not. They don't know that I'm going to do that with it. But in the future, if I was to get a bridge loan, then go DSCR based off of those incomes and still permit it and show that it is that, I think that that kind of gets around that. Unless I'm misunderstanding what you're saying.
No, I know. You understand, right? I'm just wondering with my experience in DSCR loans is they're pretty tight too, is what they want to see. Now I know it's capital, but if the income's there, the income's there, but they still don't necessarily like things that are unconventional. The banks just they're scared of everything.
Oh, I see.
So
What
if
you
you
mean.
actually,
Yeah.
I mean, is your mentor, has he got these DSCR loans based on the income from these properties?
He has a list of lenders that are very friendly to this model. Yeah, and that's kind of partially
I
what
think
you're
that's
buying
important.
into. Yeah. Yeah. That are he's happy to lend you to, you know, it's not my place to give out who they are and stuff, but you know, he's made those connections with them. And yeah, it's a little bit of a last piece of the puzzle kind of thing that is definitely important. Yeah, you raise a bigger concern.
Yeah, that's a good point. And I feel like too, like you're going to get a bigger and bigger list with that, right? Those lenders are they're going to start showing up. Like the banks, even some of the bigger lenders are going to be like, wait a second, this model like works and we're not getting any fight from it. Like DSCR too, like that they're strict. I mean, like for us, you know, they base on rent comps and stuff like that for like the properties that we buy. And they always come back. The appraisals always come back a little low on the rent, so you got to fight them a little bit on that. But they're pretty strict. But once you get them, I mean, it's a super simple setup, you know. And I can see the same thing with pad splitting. Like you can go in almost with a DSCR lender, and then just be like, yeah, so this is a 3-2, but we're going to make it a 5-3 or whatever it is, and here's how we're going to do it. Can they appraise it based on that after it's done? There might be some other type of lending setup out there where they can do that. But either way, for you to get conventional and then later on you can just go back and refi it or whatever you want to do later if you wanted to, right? And pull out and change that whole system, I guess. I don't know. But
Yeah.
Yeah.
DSCRs are also competing, right? So we have a number of
Yeah.
private equity. You have other folks. We have private money, folks that are competing with a DSCR loan right now. And so they want to compete. And so all these other restrictions that I know that they have a lot of those in the beginning and somewhat now. My experience in talking to a few of them, they've gotten real a little bit more I don't know, realistic about what is happening and what their competition is. And so, okay, do you want to lose over a certain period of time? You want to gain? And then if there are other people don't know any other options. And so the savvy person who knows that other options and has a lender that wants to, in terms of DSCR, then those folks are being a little bit more realistic. So it just depends on who you're talking to. So I would agree with David. If he has someone who's already working in that space, that's fine. But what I'm finding is they're starting to be a little bit more realistic because there's other competition out here. And that helps those that are trying to get the loan.
Got it. Yep. All good
Yeah,
points.
for me, I'm fresh into this space. I've done house hacks. We bought it all cash through some partners, rehabbed it all ourselves, and rented it out for a year, and then ended up selling it. So it's kind of like a weird long-term flip. But that didn't go through DSCR. We held it the whole time. So it's still a new process for me. I don't have all that background information, which is why I'm loving that I'm in this group and will suck up quickly. But you know, like, yeah, I'm still learning and figuring out as I go. And the background, I knew this house I was okay with because even just renting it as a 4-2, at least like cash was like $250 to $400 a month. So I was like, okay, with worst case scenario, even as a 4-2, it's still a good win that's down the road from where I currently live. That at least gets me some more experience under my belt. So I'm jumping for it, and then I'll kind of refine once I learn from this one and grow and scale, I think, as time goes on.
Yeah, dude, 100%.
Hey, Jeff, I know we're probably going to get off here pretty soon, but I just wanted to give this one small little thing for us. Was that you never know where your idea may become something else in terms of in terms of giving an investor. So I had someone recently I was at an event, they were talking, I mentioned something about an idea that I wanted to do. And then that person came to me, and fast forward, we had a couple of conversations, and now we went from, this is my idea that I put out in public, which I had never done before, which was to open a women's veterans homeless center. And now that's gone from the idea to the plan to the beginnings of the business development plan, with the investor waiting to see what am I coming up with. And so, and other investors that are like, okay, well, when's your plan? What's your plan? So, you know, if you have these ideas, people are going to really be willing to help you, but they're also going to be willing able to raise the capital to fund it. So, if you have something out there, and frankly, I'll use Perplexity AI with all my ideas, put it together. And so, just so you know, machine learning is real, and I use that for this first go around. And so just throw that out there for those of you that I know write a lot of stuff. You have ideas, some of it's on your board. It was on my board called Way Out There. Literally, that's what it says on my thing, Way Out There.
That's awesome.
So just something to consider for those on the call.
Yeah, love it. I love that. Yeah. Ty, thank you for that. Really appreciate that. And you guys, all the input you give is awesome. I mean, that's why I was thinking today, I'm like, well, we don't have a guest, so we're just going to do a workshop and talk. And if it's raising private capital, it is whatever. We try to keep it that way, because I know you guys really want to talk a lot on that. But it was just good to hear David's success stories, Megan's and stuff like that. And everybody just kind of doing their thing. So super awesome. And I love to support all that. So so we're not on next Thursday. Obviously, it's every other Thursday. So the next one we'll have, it'll be a Bigger Pockets author. We've had her on before, Whitney Elkins Hutton. She's not going to go too much into raising private capital, as much as she likes to talk a lot about generational wealth and how to build it. We've had her on before. I think Antoinette and Craig, a couple of us were on for that call. She's awesome. Like, whew, I read her book. It's really, really good. Antoinette, you got it too, didn't you? Or no? I thought you did.
I did, but you beat me to it. Haven't read it yet.
Yes, it's awesome. So anyway, she's going to be on, and then after that, we have quite a few Better Life guests, including Kevin, who was just on with us just now. So anyway, it's going to be good. I really appreciate you guys being on. If you guys want to look at past episodes or whatever, like episodes, I don't know what we call these calls. It's on my Stash Investor YouTube channel. So go on there, social, Stash Investor, all that stuff. And I really appreciate it, guys. Hopefully we can just keep on doing this and having these calls. And I really appreciate seeing all your pretty faces. Take care, guys. All right. See y'all. Take care.
Yeah, appreciate it.
All right, see ya.
Bye.
Bye. See ya.